the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares dipped earlier today amid a mixed session for Asian markets. So if we look at the Straits Times Index, it moved 0.29% lower to 4,290 points at about 2:16 p.m. Singapore time, and that's with a value turnover of some 754 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in the red, down 0.29% as well at 4,290 points. In terms of value turnover, that's 1.43 billion Sing dollars. Gainers outnumbered losers though, 285 versus 270. Top advances for today we've got for you UOL, City Developments Limited and ASUS, and top decliners we have here F-Point, GMXUSD and DBS. Well, in terms of counters to watch, we have Seatrium because the offshore marine and energy engineering solutions provider announced yesterday that it has divested its AmFELS shipyard in Brownsville, Texas, for consideration of 65 million Sing dollars. Now, elsewhere from Chinese e-commerce giant Alibaba announcing its largest ever AI language model. So what a mixed message from the Fed on interest rates mean for investors. We've got more corporate and international headlines in focus. And joining me on the line today is Jeremy Tan, CEO of Tiger Fund Management. Jeremy, welcome.
Hi, Tian Tian.
Great to have you join us. And Jeremy, let's start with global markets this time around. We saw U.S. markets ending lower overnight. We've got worries about high valuations and that mixed messaging from the Fed with regards to its plans for interest rates. So at an event in Rhode Island, Fed boss Jerome Powell warned that there was no risk-free path, but officials appear to be split on where they should move in terms of the rates. So what do you make of the uncertainty and what does this mean for investors then?
Well, I guess if you look at overall, I think we are still in a rate cut cycle. I think last week we have seen that continued momentum in the U.S. market on the back of this interest rate cut momentum, and especially we have seen post-September, the Fed has definitely turned a bit more dovish than previously by reducing the Fed fund rates by 25 basis points. And I think there is still a lot of market expectations that into the last two Fed rate cut cycle in this year, for October and December, there is still a high probability that the interest rate will continue to be cut by 94% in October and 77% in December. So overall, I think that this continue to be in place, but I think where the mixed signal will be is post that in 2026, especially where there is really less consensus in terms of that rate cut cycle decision. And overall, I guess you can see that the Federal Reserve right now is actually pivoting towards, the maximum employment side of the spectrum rather than stabilizing inflation, even though inflation right now is still a little bit sticky. On the core inflation front, we are looking at U.S. Core inflation of about 2.9%. So this is still above the Fed's long-term target. But I think that in the interim, they will still be maintaining a bit of that flexibility, especially with regards to that long-term inflation target. But at the same time, right now, they would really want to focus in on the weak employment number that we are facing right now.
Okay. And if we go back to the Singapore stock market as usual, Jeremy, how did the STI fare today? And any surprises if we look at the biggest movers and also the sectors that they lie in?
Well, for the STI market, it is down by 0.29% on the day, trading right now just below the 4,300 levels. So I think following the Fed's commentary last night that sent a bit of that mixed signal versus the dovish signal that it had in September, I think that there was a little bit of market consolidation there after markets. And then you can see that overall the biggest movers from the STI actually for today came from the consumer-centric names such as Dairy Farm International and Genting Singapore. Also for Seatrium, after reasonable share price performance, that also consolidated a bit in terms of that actually formed the largest detractor for STI today. On the other hand, given that the interest rate cut momentum continue to be in place for the rest of 2025, we have seen also locally the Singapore SORA rates have also fallen to quite a low level, and actually that is providing some support for developers. And as a result, you have seen that today, despite the weaker momentum on Wall Street and also for the rest of the STI basket, actually the property names such as UOL, City Development, Hong Kong Land, they actually dish out positive performance today. And this is on the back of a lower interest rate for the Asia markets as well. And that is actually providing a strong backdrop for the strong primary market transactions to be continued in Singapore.
And zooming in on some of the companies to watch, we do have Seatrium. Seatrium announcing yesterday that it has divested its AmFELS shipyard in Brownsville, Texas, for a consideration of 65 million Sing dollars. Generally speaking, it seems that we are seeing some firms divesting their assets of late. Is the current market environment conducive for such quote-unquote pruning activities, so to speak?
Yes, definitely. Overall market valuations across the world has actually been re-rated, and as a result, we have seen some divestment activities. We have seen particularly for Seatrium, this divestment is actually part of them disposing some form of the surplus facilities that they have, and that will actually help to reduce the overall overhead expenses and also drive a bit of that group operational efficiencies and also driving better margins ahead. And as a result of this divestment for Seatrium, they will actually realize one-off exceptional gains that is actually pretty significant of about 26 million, given that the planned divestment of 65 million is actually way above the book value of 39 million. So this is actually a very strong windfall gain for Seatrium at a point where they can actually consolidate their capacity right now.
Now, if you're just tuning in, we're in conversation with Jeremy Tan, CEO of Tiger Fund Management. Across the region, Jeremy, Chinese e-commerce giant Alibaba announced today its largest ever AI language model, which is the Qwen3 Max. At the company's annual conference, Chief Tech Officer of Alibaba Cloud, Zhou Jingren, said the model contains more than 1 trillion parameters and shows particular strength in code generation and autonomous agent capabilities. How will this affect the AI and semiconductor industries, given the slew of developments we saw, including NVIDIA's investments in OpenAI and also in Intel?
Well, I think definitely a very strong set of news for Alibaba, given this new code for Qwen Max for its LLM model that actually rivals that of OpenAI, Google's DeepMind, and other Chinese competitors such as DeepSeek. So in that sense, we are seeing that technological gap between the Chinese players and the US labs that is actually right now continue to narrow with this release. And as a result, you have seen very strong share price performance for names within Asia, especially China, such as Alibaba and Baidu, actually catching up in terms of that valuation gap. And I think that going forward, there is still going to be a lot of technological developments, whether be it in the East or the West. There was definitely a lot more self-reliance there that the Chinese, I would say, the big caps will be coming forward. In fact, Alibaba is also developing certain high-end chips, AI chips, that will actually seek to reduce their reliance on NVIDIA's chips going forward. And Alibaba has also pledged some 52 billion in terms of investments into AI infrastructures over the next 3 years on this very strong demand there in China as well. So I think that previously there was really a lot of, I would say, under expectation for some of these Chinese technology or AI names, but we have seen that they are coming up very strong models that actually compete with that of their Western counterparts. And you can see that there will be continued a lot of investment into this space, such as yesterday, for instance, like NVIDIA actually investing into OpenAI, some 100 billion or so. And I would say that although there are some concerns about this circular financing, but what is I would say that is being very transparent is that there is going to be a lot more investment into this space, and I think this space will continue to attract a lot of new developments, and there's definitely a space for investors to continue to watch out for.
And in the meantime, Jeremy, the International Monetary Fund, IMF, said in a regular assessment released today that South Korea should maintain its accommodative fiscal and monetary policy settings to support its economic recovery. It also warned that structural reforms are essential to lift the nation's longer-term growth prospects. How would you read into the comment, and really what's next for the Bank of Korea in that regard?
Well, for the overall South Korea economy, I think they are definitely facing a lot of secular or structural headwinds, definitely in terms of that aging population, given that South Korea is having one of the lowest fertility rates globally. So they are actually facing that long-term growth driver decline. In terms of that population decline. And also furthermore, in terms of household debt, they are also in the highest range around the world. And that is actually limiting consumer spending. And furthermore, I think this year we also have seen a lot more instability with regards to politics, especially since December last year. There was a martial law and there was really a transition of leadership in the middle of this year to a new president. And furthermore, there's also a lot of other global headwinds, for instance, like the new tariffs that Trump has imposed on Korean exports into the U.S. by some 15% in terms of that baseline tariff. So this will definitely cause South Korean exporters to have a little bit of that impact in terms of their exports growth into that U.S., given that South Korea is also heavily dependent on their exports of electronics and automobiles and even pharmaceuticals. So I think going forward, definitely the Bank of Korea will have to maintain that accommodative policy to support growth, given that inflationary pressures right now is not so much of a concern, but more so on some of these near-term growth challenges. And also the longer term, I think there needs to be a lot more structural reforms around some of that I mentioned in terms of aging population, high household debts that needs to be solved. And also, I would say that there is going to be a lot more global geopolitical challenges that is very uncertain at this point in time.
And finally, before we let you go, Jeremy, all eyes are on the release of the U.S. Personal Consumption Expenditures Price Index, or the PCE Price Index, the Fed's preferred inflation gauge. What are you expecting on this front, and really what implications will the numbers have on markets then?
Well, in terms of the latest PCE numbers for August, the market is really looking at, for August, 2.7% year-on-year increase. And on top of that, for the core PCE price index on a year-on-year basis in August, that is expected to rise by about 2.9%. So as mentioned, you can see that the overall inflation is still actually very sticky, even if we take out some of the very sensitive components such as like food and energy. So I think that if there is going to be a more upside surprise in terms of inflation, I think that will create some disruption in terms of the market's view of the Fed rate cut cycle for 2025, and also more uncertainty in 2026. And therefore, given that a lot of upside or a lot of that exuberance is actually already being priced into markets, I think that could cause some volatility there. And already we have seen last night that some consolidation there in terms of the U.S. markets.
I see. Thanks so much for the insights today, Jeremy. That was Jeremy Tan, CEO of Tiger Fund Management. Thank you so much for joining us today on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.